There's a lot of confusion that exists about the order of operations when it comes to getting your bookkeeping done. It's definitely something that trips people up, not just because oftentimes we do things piecemeal here and there, but because it's sometimes difficult to see the big picture and what we're actually trying to accomplish. So today I'm going to walk you step by step through what it takes to do a month's worth of bookkeeping in QuickBooks Online. We're going to add transactions. We're going to be matching things up with existing documentation and existing entries that are already on the books. We're going to reconcile all of our accounts, including a couple of loans, and we're going to discuss how we can appropriately recognize interest for those kinds of accounts. Anyway, let's go ahead and get started from the beginning. So the first place that we go when we're working on getting our bookkeeping done for the month is into the bank transactions tab. So we do that either by going to accounting, or if we have it bookmarked, we can always select bank transactions from our bookmarks bar. But if we just select accounting right here, bank transactions is the first thing that comes up. Now, I did just release a video a few days ago about how we need to be careful when we come into our bank transactions tab, because just because a transaction is showing up here doesn't mean that we should automatically categorize it. And when I say that, I mean actually hit categorize and then post a transaction, okay? We can see here that we actually have the option to match or match some transactions against existing bills or invoices that are already in QuickBooks. So it's really important to be aware of how we are working through this process, okay? So when it comes to our transactions in QuickBooks, there are a few things that I recommend doing. First, I recommend working end to end through an account before you move on to the next account. The primary reason for this is that it's not uncommon, especially when you have a business checking account and several other accounts like a savings account or other operating accounts or even credit cards. It's not uncommon for things that come out of our business checking account to interact with those other accounts. And if we map it all correctly when we go through and categorize everything in the business checking account, that means that we're going to have matches available to us when we go into our subsequent accounts. So it really does tidy up the process, and that works not only for accounts where we have the bank feeds set up for them, in which case we'll see that we actually have the option to pair transactions, but this also works when we don't have a pair available. So let's say that we have a loan or financing of some kind where we don't have a bank feed established. Making sure that it gets mapped correctly out of our checking account is the first step to ensuring that we're also going to be able to reconcile that account too. So what is the honest to goodness workflow that I go through here? Well, like I said, I always start with the primary checking account, and I work all the way through entering transactions. I tend to kind of flip this on its head a little bit, okay? Because I don't want to accidentally categorize a transaction that should be matched to an existing transaction on the books. So what I personally do when I'm going through this process is I will sort by match/categorize here by clicking on this section of this gray bar. Now, what this does is it pulls all of the transactions that have a possible match on the books already to the top of this list. So I am looking at those first, okay? This is really important because this is where the bank feed can really trip you up. If I were just to categorize these transactions instead of matching them, I would be duplicating them. So what we're going to do here is a little bit of trust but verify. So I'm going to look at each of these and decide whether or not this makes sense. Okay, so for this one, I have a bill from Sparkling Office Cleaning for $275, and the bill was issued on 5/15 of 2026. Well, I have a payment sent out for office cleaning for $275. That makes this a high confidence match. Okay, so I could go ahead and match this transaction. Now, that was a bill, but this does also work for invoices. Okay, so if I have an outstanding invoice on my books and QuickBooks sees a payment received for that same amount with some commonality, it's going to recommend that as a match. Now, again, trust but verify. QuickBooks sometimes suggests the wrong match for things, okay? It might pick up something in the bank description that doesn't actually apply. Sometimes if the dollar amount is right, it just wants to push it forward. And if you have a certain dollar amount that you invoice for regularly, like let's say you send a $250 invoice to all of your clients because that's your base rate and everything else goes up from there, well, you might have a lot of invoices for that dollar amount. So you have to be really careful about just blindly clicking match. We want to be sure that we are matching to the correct transaction. Now, again, based on the dates, based on who it's from, and what I'm seeing here in the bank description, this is another high confidence match, okay? Followed by two more. All right, so we have a bill from Comcast. This amount matches up perfectly. And since it's kind of an odd amount, I would say, again, that's something that we can really look at and say, oh, yeah, that is with a high level of certainty the correct match. So we'll go ahead and click there. And then same with this one, Pacific Business Park, based on the date and the dollar amount matching, we can go ahead and match this transaction as well. Now, if you're going through this process on your own books, and if you're not super familiar with your accounts payable and accounts receivable, it never hurts to take a few minutes to just step back, gather your documentation, make sure that you are matching everything up appropriately, and go from there, okay? All right, so once I have gone through and matched up all of the transactions for my first account that I know are matches, I would want to move on to transactions that have rules associated with them, okay? Again, it is phenomenal that we can build out these rules to create some automation and make our data entry a little bit easier, but we do want to verify that everything is being applied correctly. So I'm just going to do a little spot check here. We see all the square deposits coming in. Those are training materials. I happen to know that's the correct classification for this. We have a charge from Pacific Gas and Electric Company. I know that's for electricities. We have a Stripe deposit. That is, again, for training materials. So all of the transactions that have rules associated with them are being applied correctly. So I can go ahead and add all of these transactions. And I can do that by selecting the first one, hitting the Shift key on my keyboard, and selecting the last one. That will mark off all the transactions that I have a rule applied to that I have reviewed and would like to add to my books. So I can go ahead and hit post. And that's going to move all of those onto my bank register and onto my reports as well, okay? So now what I have left is a kind of an odd assortment of things, all right? We can see I do have some transactions that are offering a pair. Now, this is kind of interesting. QuickBooks doesn't always pull these to the top when you are looking at transactions in the order of match categorize. But that doesn't mean that they shouldn't still be assessed before we start to add additional transactions. So one thing that I might actually personally do here is instead of automatically pairing these transactions, I would probably go, okay, let's make sure that this is actually matching up the way that I would expect it to. So I have here on 5/16 a credit card payment for $2,148.72. So what I'm going to want to do is I'm going to want to go into my business credit card bank feed and make sure that that transaction is showing up. And let's see. Sure enough, we have a transaction on 5/16 for $2,148.72, and it is offering a pair to the business checking account. Now, what I'm going to do is I'm actually going to hit post on this side. And then when we go back into our checking account, we'll see that that transaction has now been added to our bank register, okay? Now we have the same thing here with our savings. So we had a transfer coming in from our savings account on 5/29 and a transfer going out to our savings account on 5/20. So let's go ahead and hop into our business savings account and make sure that those transactions are coming through there as well. And sure enough, there they are. So I can go ahead and post both of those transactions. Now, that has taken the number of transactions that are still left to be classified on our books all the way down to 9, okay? Now, that is just in the checking account. We still have some work to do in our credit card and in our savings account. But you can see where working through things slowly and methodically to make sure that they are being matched first, and then having rules applied, and then pairing things with transactions that are happening in our other bank transactions feeds, that really starts to cut down on the overall number of transactions left for us to deal with. So at this point, what I can assume, although again, always trust but verify, when you get to this point, I recommend running an accounts payable and accounts receivable aging detail or summary, just to make sure that there aren't any transactions on the books that should be matched with items here, but aren't showing up automatically. Okay, there are some times where QuickBooks struggles to offer a match if, for example, 2 bills were paid with a single outgoing payment from your bank account. Okay, so always double check, make sure that you're not missing anything. But once you're at this point, you can go through the process of just classifying the transactions. Now, I want to call your attention to a couple things here. First, we can see we have checks, we have little blue eyes, and then we have little orange exclamation points, okay? And QuickBooks is communicating all different things to us with these. This is telling us that it is a high confidence classification, okay? So there is no rule associated with this, but based on how this has been classified in the past and how the bank description is coming through, QuickBooks is pretty sure that I will be saying that Office Depot is the vendor and that the expense account is office supplies. Okay, now this happens to be correct, but just because you see these little green check boxes doesn't mean you can automatically post the transaction. For example, just because you bought office supplies from Office Depot in the past doesn't mean that that's what you were purchasing this time. Maybe you bought a computer or a desk or something that should go into a fixed asset category instead of an expense category. This is another trust but verify. And I know I probably sound like a broken record saying that, but at the end of the day, as much as we train our QuickBooks file and as we train the AI here, we always want to have a high level of understanding of what's going on and be able to speak to whatever is happening. So we don't just want to blindly classify and assume that QuickBooks has done its homework. Okay? So for this particular transaction, this is actually good, and I can go ahead and post it. All right. Now, from here is where it gets a little bit more dicey. Okay. So we can see QuickBooks has some things with a little blue eye, okay? That is a tentative match. Basically, what this means is there's no historical data for QuickBooks to have a higher level of confidence in what it is suggesting to you, but based on what is in the bank description, it is recommending a vendor and or an expense account that it thinks should be associated with this transaction. Now, critically here, this is actually not an expense account, right? This is a liability account that it is recommending I send this payment to. Now, again, this happens to be correct, which is wonderful. It's great when QuickBooks is able to kind of put the pieces together and help us make these determinations. But we still have to review it and make sure that we are doing everything correctly and by the book, okay? So this is a loan repayment to the SBA. Now I have 2 different options for how I can handle the recognizing of interest in a situation like this, okay? I can either go in and split this transaction and allocate the correct amount to the principal balance and then add an amount and send that to interest. Or I can send the full amount to the liability register, and then when I reconcile it, I can put interest in there. So for this particular run through in this particular instance, I am actually going to show you the second way, where when we reconcile the account, we put the interest in to be recognized. So I am just going to be sending this to that SBA loan, which, like I said, we can see as a long-term liability here. So since I'm not splitting it out, I'll just close that and we can go ahead and post this transaction. Now again, we're just kind of whittling down all of this. The last one that I want to call your attention to here before I just go ahead and create some rules and get some classification done so that we can move on to the next account is this particular transaction here. So we can see there's a little blue eye next to this particular transaction. Now it is offering, since it hasn't filled in a vendor here, what that tells me is that it's actually read information from the bank description and it has a suggestion for who to add as the vendor. Okay, now again, this particular example happens to be correct, and QuickBooks has definitely gotten a lot better about recommending vendors and making it quick and easy to add them. So this happens to be correct. I can click Add Evergreen Toyota, and then we can see that it makes this process a little bit easier because it automatically fills in that information. Now, if I wanted to, I could add additional information and context here, but for this one, I don't need to do that, so I can just hit Save. Now, this is another loan payment. So I want to be sure that I am sending that to the liability account, not to an expense account. So I'm going to type in Toyota, and we have two different possible items here. Okay, we have the Toyota Prius, which is a fixed asset, or we have the Toyota Prius loan. And we want to be sure that we are sending this particular payment to the loan account. So since I've now done that, I can hit Post. Now on the transactions that are left, I'm just going to go through and classify these, right? We have a transaction from Intuit, we have a payment from a client that doesn't have an invoice on the books, and then we have a few other miscellaneous expenses. I have a few different options here. I can just go ahead and add a vendor if need be, and then assign an expense category an expense or an income category, depending to these transactions, and then get them posted. And once that's done, I can move on to the next account. So I'll go ahead and do that now. That trust but verify principle. When I first opened this transaction, it had a little green check mark here next to restaurants because it had made the assumption that this particular transaction was for a restaurant, okay? It turns out when you get into this was for the Sacramento Chamber of Commerce. It was for a networking lunch, but it was paid to the Sacramento Chamber of Commerce. And something like this would odds on be more of a networking event, right? So we might put that into an advertising expense category instead of to meals and entertainment. So that is an example of where if we're unsure or if there is anything that seems a little odd, we always want to expand these transactions, get that additional bit of detail and clarity and context, and go from there, okay? So now that I have something in for all of these transactions, and you saw some of them I had to add expense accounts for, some of them I just was able to fill in vendor information. But once all of that is done, once I have a vendor and an expense or income category for all of them, I can click this box right here up at the top and say Post. And then those will all go onto my bank register where they will wait to be reconciled. But as a general rule, once I am in the Bank Transactions tab, I kind of like to work the rest of the way through it and then go in and reconcile all my accounts. So now we're going to hop over to the Business Savings account. So for this particular transaction, we can see it's an interest payment. QuickBooks has automatically recommended interest income. That seems perfectly reasonable to me, so we can go ahead and post that. Talk about a quick victory, because now we're on to the credit card, where we're going to have a little bit more work for ourselves. So, first thing that I want to call your attention to, we still have our transactions organized by match or category. And as you can see, QuickBooks is actually suggesting a bill for this particular LinkedIn transaction. Now, here's the deal. You can actually pay a bill with a credit card, and you can tell QuickBooks that. If you have a recurring transaction that goes out, you could even create a recurring bill so that it shows up every month and you know that it's coming due. Then, when the transaction clears your credit card register, QuickBooks will offer it as a match, same as it does in your checking account. And I have clients do this for, actual bills that they're receiving from vendors too. I have clients who are construction companies, and there are vendors that let them pay with credit card without having additional fees. Well, they take advantage of that and use their credit cards so that they can get it paid quickly and get rewards. Makes a lot of sense. So if that is an option, you actually can do that, and you still can match that payment up when it comes through on your credit card. So we'll go ahead and match this transaction, same as we were doing with the bill payments that were coming through on our checking account. Now that we've done that, and we've also paired the payment that came through from our checking account, we're left with the same set of circumstances over here, okay? So we are left with transactions that have rules applied to them, and we want to verify and make sure that all of that makes sense. And if it does, we can add those. And then we have to add the remainder of the transactions. Now, again, it's up to us how much time and energy we want to put into this. One of the things that I will usually do when I am looking at transactions and looking at categorizing a bunch of things at once is I might choose to sort it by bank description. And basically what that allows me to do is it allows me to see if there are recurring transactions to the same vendor that are happening where I might benefit from creating a rule. And we can see here that a lot of these transactions are one-off transactions for the month, but they may actually be an instance where we'll see them recurring in the future, right? I'm sure this is not going to be the last time that I go to Staples as a business owner, or Target, or the last time I see a charge from Wix, right? These are all things that might be recurring items. And so if I create a rule, then the next time that that transaction flows through onto this page, it's going to have that rule applied to it, and it's going to mean that I'm not going to have to manually tell QuickBooks who the vendor and what the expense or income account associated with it should be. So again, just something to think through. But for now, what I'll do is I'll go back to sorting this here, we'll get these added, and then I'll start working through these other transactions. All right, so now that I have gone ahead and created rules for these transactions and I have the vendor and the expense category showing up the way that I want, I can go ahead and select the first one, then select the last one, and hit post, and that will post those 9 transactions. Now, this is another example of something that might end up occurring in the course of running your business. Maybe you go somewhere and you accidentally use a business card for a personal purchase. How should we handle that? Well, basically what we want to do is we don't want to record this as an expense to our business, because I got to be honest, as a bookkeeper, I don't really see why I would be purchasing something from REI for my business or for my company, okay? So I have to then look at what that should go to. And at the end of the day, it should go to either a due to or due from account. So it would be due from the owner. So in theory, I could reimburse this $186.27. Or depending on the business structure, I can put this transaction to an equity account, which means that it will show up basically as an owner distribution from the business. Okay. As a general rule, I highly recommend making sure that if you are going to be taking money out of your business, not to do it transaction by transaction, but instead either run payroll for yourself, again, dependent on your business structure, or transfer money from your business account to your personal account and then spend it on personal purchases out of your personal account. If we start commingling money, it just tends to get messy really fast, and we don't want a ton of personal transactions hitting our business books because it just muddies the water. But one-off things do happen, errors occur, and we have to be able to account for that. So for this particular purchase, what I'm going to do is I'm going to put it to the owner equity account that I have on the file here, okay? So it is owner investment currently. And if I were to look at my balance sheet right this second, I would show that I have contributed more than I have taken back out of the business. So basically, it's going to be as if the business paid me back the $186.27 that I had already put into it along with other money. But I'll put it to this equity account and we can look at how that shows up on our reports later. So I can go ahead and post this transaction. Now at this point, we can see I have all caught up and I have little green check marks all across my bank transactions tab. Now, what that tells me is that I have added all of the transactions for these particular accounts. Now, something to keep in mind, this is a sample file. So all of the transactions that were here to be classified were for a given statement period. And that statement period is the statement period ending at the end of May and early June of 2026, okay? That's odds on not going to be as clean cut in your file if you have your bank feeds established because it's going to be pulling information through in close to real time. So you can always filter transaction by date. So you could say you only wanted to see transactions up through the 31st of the month or up through the statement ending date. So you could classify those. But if you're already in, if you're making rules, if you're building automation, sometimes it doesn't hurt to just work all the way through adding transactions, okay? So now that I have all of these transactions added to my various accounts, I'm going to go ahead and start the process of reconciling. All right, so after you've gone through and added all of your transactions, the next first step for getting reconciled is to get all of your statements together and in one place, okay? So what we can do is we can either go and download them all from our bank, we can have a folder that we have set up on our computer where we're saving them as they come in, or if you happen to have your bank still sending you paper statements, you can just collect them, and once you have them all, run through and do these reconciliations. The beauty of using the bank feed is that reconciliations have gotten a ton quicker. So in theory, if there are no issues, if there are no problems, we should be able to get through this process in a matter of minutes. So in order to reconcile, we're again going to return to accounting up here, and then it happens to be a little bit farther down under that accounting drop-down menu. So if I click reconcile, it's going to take me to the reconcile screen. Now, this is not the only way to navigate to this. If you are already in your chart of accounts or already in a bank register, there is a reconcile button in the upper right-hand corner. But if you're starting from the home screen, this is how we would get to the reconcile screen. So once we are here, we want to start by confirming a couple of things. One, we want to confirm that our account is reconciled up through the previous statement date. So this one has been reconciled through April 30th of 2026, and my statement period is May 1st, 2026 through May 31st. So that's perfect. That's exactly what I want to see. The second thing we're going to check is whether the beginning balance matches what's showing up on our statement. And again, sure enough, we're in the clear. If for whatever reason those two criteria weren't met, we would have to figure out why before we go ahead and move forward, okay? Maybe the previous month's reconciliation didn't get done, or maybe there's actually an issue where a transaction was changed after the fact, and that needs to be resolved before you can start reconciling for this month. So the other thing here, since we have already added all of our transactions from the bank feed, QuickBooks is letting us move forward. But if for some reason we had not yet added all of our transactions, there would be a little notice showing up saying, hey, you need to go back and add the transactions from the bank transactions tab so we can move forward with this reconciliation. So in order to get this going, all I'm going to do is I'm going to enter the statement ending balance, and then I'm going to enter the statement ending date. And that little shortcut there, if you enter a 6-digit date code, in this case 05/31/26, or if you're in the current year, you can actually just do 0531 and then hit tab. Whoops. There we go. And it will fill in the rest of it for you. So it'll fill in zeros, slashes, and the year. So now I can go ahead and hit start reconciling. And here's what we ultimately want to be looking for, okay? We want a couple of things to be unfolding here. We want our statement ending balance and our cleared balance to be the same, and we can see that they are. We want the difference here to be 0. And if we want to do a little bit of a double check here, we also want to see that the deposits and the withdrawals match what is showing on our statement, and they do. The last thing that I generally tend to do here is I tend to scroll down and see if there are any transactions that weren't cleared for some reason, okay? Because sometimes we might see, and we can see here, all of the transactions, these little green boxes, tell me that they came through my bank transactions tab, okay? This one doesn't have that little green box, so QuickBooks doesn't know to automatically check it off. So let's go ahead and look at this one a little bit more closely. It turns out this is just a voided transaction. And so since that has been voided and since the amount is 0, I can go ahead and mark this transaction and reconcile it since it did take place in this period. Okay. Now, if there was a dollar amount associated with it, we obviously wouldn't want to mark it because then it would take our balance out of 0. But we would want to look into why we are seeing a transaction that doesn't have a little green box and was not automatically marked off, because that could be indicative that something else is going on and that maybe we didn't match a transaction the way that we were supposed to, or something like that. In an instance like this, it could be that the date was wrong. Maybe the date was entered as 5/18 when it should have been 6/18, right? You never know. So if there is a transaction that is not marked in your reconciliation screen and you can't justify why that is, like a check that didn't clear or like a transaction that happened on the last day of the month but didn't clear on our statement, we want to be able to speak to that and say why. But once our difference is 0, we can go ahead and hit finish now and move on to the next reconciliation. Now, for this particular purpose, I had actually condensed all of the statements into one PDF document, so I'm just going to go ahead and scroll on down to the savings account here. And once you're in the reconcile screen, you can actually navigate from account to account just by clicking here and then selecting the next account from this drop-down menu. So now I'm going to reconcile my business savings account, and same thing. That beginning balance is perfect. We see that the last statement ending date was 4/30, so we're all set there. I just have to enter this ending balance and the ending date and move on. Okay, and again, here we see all the transactions came through the bank transactions tab. Everything is working out exactly how we would expect. We have a $1,000 outgoing payment. We have a total of $4,412 in deposits, and that includes the 2 transfers from my checking account, plus the interest income that I earned on this account. So we can go ahead and hit finish now on this as well. Now, one thing to note there, because we have a bank feed established for this particular account, we already have the interest coming in. When we get to the loans where we don't have our bank transactions tab linked up for those loans, we are going to be adding that interest. So we'll be looking at that in just a moment here. So now we'll go ahead and move on to the next account in line. And here we are, we have the business credit card. So again, we'll go back here. We're going to select the business credit card, and we're going to confirm the last statement date and the beginning balance. And sure enough, the last statement ending date was 5/10 of 2026. The statement period begins 5/11 of 2026. So we're all set there. The previous balance is correct. So now I just have to put in the new balance, which is 5492.51. And the new ending date, which is June 10th. And again, here we go. We can see we have all of the transactions coming through. There are no unmarked transactions. The final thing that I might want to do, I've confirmed the balance is 0, so really I am set to go, but I might want to double check that the charges and the payment line up with what's showing on my statement. And again, sure enough, we see there's that payment, and then we see the $3,914.84 of new charges. So we're all set there. So this is a great illustration of why using the bank transactions tab is actually a wicked shortcut when it comes to getting our transactions reconciled. It means that we're basically pre-screening all of the transactions that are coming through, and as long as we aren't accidentally adding or categorizing transactions that should be matched with transactions on our books, our reconciliation process is going to be exactly this smooth every single time, which is phenomenal. If you were using QuickBooks a decade ago, in desktop specifically, you had to manually mark off every transaction that cleared on your bank register, unless you happen to only have the transactions for that month entered so far. So it really does make a difference in our ability to move through this process quickly and ensure that we are seeing complete and accurate financial reports. Now, without further ado, let's go ahead and move on to our next account, which is our loan account, okay? All right, so like I said, for this loan transaction, this is a brand new loan. We borrowed $50,000, so the beginning principal balance here is showing as $50,000. Now, the loan was funded in April, but I didn't receive a statement for the month of April. So what I can do to make life a little easier on myself is I can go ahead and just say 50,000 is the ending balance on April 30th, and then start reconciling. So that will give me the option to go ahead and reconcile this $50,000 transaction. Now, as you can see, because this transaction didn't come through the bank feed for this particular account, it came through our checking account bank feed, but it wasn't matched with the bank feed on this side because we don't have a bank feed for SBA loans. I'm going to have to manually select this transaction, okay? But we can see there's the $50,000 transaction. Everything works out. We can go ahead and hit finish now. So now we can go ahead and move forward with our reconciliation for the month of May, okay? So our ending balance is provided here. It's $49,686. Whoops, $686.54. And the statement ending date is 05/31. Now we want to enter in that finance charge because we see that there was interest paid. You can always split the transaction from your payment account register if you would like, but for the purposes of this example, I'm showing you how you can enter the finance charge when you are reconciling a loan account. Again, I only recommend this for loans that do not have a bank feed associated with them, okay? But we'll go ahead and put that in. It's $229.17, and the expense account would of course be interest expense. So we're going to go ahead and say start reconciling. And again, since we don't have a bank feed set up for the loan, we will have to manually mark this transaction off. But on the bright side, we can see right here that the difference is the exact amount of the transaction that hasn't been marked off. So we'll just go ahead and mark that off, and then we'll be able to reconcile. So that all worked out. Now, we're probably going to be seeing something similar coming up when we do the Toyota loan, okay? And for the same reason, we didn't really have a statement for the prior month because it was a brand new loan. So if I go here to the Toyota statement, sure enough, our beginning balance is 0, but our statement period for this is May 1st through May 31st of 2026. So I'm going to go ahead and enter the beginning balance here of $30,733.34, and that's going to be the ending balance as of April 30th. There's no finance charge for the month of April, so we're going to go ahead and hit start reconciling. And there we go. Same thing. We have this charge hitting this account, which is exactly what we would expect to see. So I'm going to go ahead and hit finish now, and now we can reconcile for the month of May. So we're going to put in the new ending balance of $30,309.59. the ending date of 5/31. Same thing here with the finance charge. We're going to put that in at 5/31 for $192.08. It is going to interest expense, so that is correct. And then we're going to hit Start Reconciling. Now, again, what we're hoping for here is that the finance charge is marked off and the difference is going to be the payment amount that came through. Since that is the case, we are all set and we can go ahead and reconcile this account. So you can see in a matter of just a few minutes, we were able to go through and reconcile all of these transactions, okay, all of these accounts. So we had our loan accounts, our credit card accounts, we had savings accounts and checking accounts. All of those are now reconciled. So the really cool thing here is that since they're all reconciled, when I go and look at my profit and loss and my balance sheet, I know that it is going to be complete and correct. Okay, so if I were to run a balance sheet as of 5/31 at this point, the balance showing would tie out for my checking account, my savings account, and my loans to the most recent statement. The one exception would be the credit card, because the credit card runs on an off-month cycle. It doesn't run from May 1st to May 31st. It runs from May 11th to June 10th. So I would have to run the balance sheet through June 10th for that particular statement to tie out. But ultimately, as long as you're reconciling all of your accounts every month, and as long as you don't have extra transactions hanging out, you can count on the balances that are showing on your profit and loss and balance sheet. Thank you so much for watching. I'm Holly from Accrual Mistress Bookkeeping and Consulting. If you have any questions, please do leave those in the comments below. I will be sure to get to them. And please like and subscribe so you are notified of additional videos in the future.